Oil long-term forecast for the week of April 30th, FXEmpire.com. Late week crude markets spent much of the previous week drifting lower, but managed to bounce to form a hammer by the close on Friday. The 102 level has been acting especially as supportive lately, and the 105 level looks as if it's resistive as well. This market looks as it's ready to start climbing again, though, out of this very tight trading range we've seen. The oil demand in several parts of the industrial world is slowing, but emerging markets have been making up for the lack of uh, demand in places like Europe in spades. In fact, the Chinese and the Indian demand is expected to keep a bit of a bid in this market going forward. The Middle Eastern part of the equation never really goes away, although the emphasis on Iran has been somewhat dimmed by a promise to talk about things later. No doubt a chance for the Iranians to continue the nuclear program unmolested. However, the situation in the Middle East has the potential of adding $5 to $10 to the price of oil at the drop of a dime, as many unknowns are still in the situation. The Federal Reserve Chairman Ben Bernanke also suggested that further accommodation could be possible if needed. Also seems to have many traders bullish for commodities as well. Of course, he didn't explicitly say quantitative easing, but this is what the market heard, and as such, the dollar is losing value again. Always a catalyst for oil to rise in price, it seems. We see the longer term movement in this market to the upside and are only thinking of buying it at this point in time. The hammer that formed for the past week is a supportive signal, and normally we would buy on a break at the very top of it. However, as we are so close to the 105 level, we'd simply just wait to see if we get a daily close above 105 in which to go long for this market. As for selling, we just aren't.